Hey, Saretsky here. Welcome back to the show. I want to walk you through exactly what's happening in the new development space. We've got some updated anecdotes, some data I want to walk you through, as well as I'm going to go a deep dive into the Vancouver resale market, which I think is an incredibly important time for home sellers. They've got another 6 weeks to sort of navigate and get out in front of the market before the market effectively shuts down in the months of December and January. And I think for home buyers, people that are out there actively, a lot of them are actively watching the market and going to sort of sift through all of the noise for you. I'm also going to put a link below to my calendar link where you can go and book a 30-minute consultation if you're a buyer of real estate in the city of Vancouver and you want to have a consult with me. I don't open those spots up very often. Going to open them up. They usually fill up pretty quick. So there's a Calendly link again below in the description if you're looking to buy and need representation. Because I'm going to do a deep dive here. I'm going to walk you through exactly what's happening in the marketplace. You guys know that I've been following this channel for quite some time. I have flagged the pre-construction market as the biggest risk out there. It is the biggest risk because it was the most investors, it was the most speculation. Prices got so far detached from the resale market, and you have a lot of leverage in that space. Developers take on a lot of leverage, particularly when you're building new construction. There's a lot of risks that are involved in that. And of course, as interest rates went up and as the market turned, you're seeing a lot of those projects now defaulting. And that is where ultimately where all the fireworks are at. And so again, we've been flagging this for almost a couple years now. And we always laugh when the governments continue to come out with targets and say we're going to increase home building, we're going to increase home building. Well, you're not going to increase home building because the laws of economic gravity suggest that it's only going to continue to fall from here, quite simply because it is just the real estate cycle playing out in front of us. So it's interesting to see the mainstream media playing catch up. There was an article in CBC this past week talking about the disaster that is playing out very in front of our own eyes here in Vancouver. The president of Rennie Group, which is the largest pre-sale marketing firm in the city of Vancouver, basically they are in charge of being hired out and pre-selling all these units for these developers. It was about 6 or 7 months ago they announced they laid off 25% of their staff. That's sort of the canary in the coal mine. But they're quoted in this article saying that the last time we saw this amount of developer-owned unsold inventory was 24 years ago. And of course, that's citing CMHC data. I've often cited Altus Group data, which is a private subscription-only service. In my opinion, has better data than CMHC. But if you're going to go off Altus Group, if you're going to go off CMHC data, they are both telling you the same thing. Developers are sitting on a lot of unsold units. And so it's interesting because again, the president of Rennie Group continues to go on. He's saying that effectively we need to get to a point where we can deliver inventory as an industry, as a province at 700 to 900 a square foot. That's $200 to $300 above where the market is today. So just to explain that in layman's terms, effectively what he's saying is we need to get pricing down a couple $100 a square foot. That is a Herculean task. Now, we heard from Gregor Robinson, the new housing minister, saying that they're going to look to the next month or two, they're going to announce some changes to get development fees down in these municipalities. But again, I think this is all going to be tweaking around the fringes. And the only way to sort of get this all cleansed out is you have this downfall. You have interest rates moving lower. You have the cost of trades and construction coming down. And ultimately, the municipalities are going to have to reduce development fees. And as I've said, you're not going to be able to launch new projects if you have a record number of unsold inventory. So again, I've quoted you the article, which says 24-year high based on CMHC data. If you look at the data, again, that we collect from Altus Group, is showing a record number of unsold units sitting on developer balance sheets. So again, if you can't sell what you already have on your books, if you cannot sell what you already have on your books, why on earth would you be going and launching a new project to the market? And so it's exactly what we're now seeing, courtesy of data from MLA, another large pre-sale marketing firm in the Lower Mainland. There has been zero new housing developments launched in the entire Lower Mainland for the past several months. So zero project launches in both August and September. Zero. You're typically seeing, 8 or 9 projects on average a month being launched. You've had zero for the past 2 months. So the industry is basically frozen, shut, solid. There is no new housing coming to market except for the stuff that is already in construction. It's already started construction. It's in the pipeline. And once it's in the pipeline, it must get built. And so that is exactly what we're going to see is those projects will complete over the next 12 to 18 months. Um, at a time when the resale market is already choking on a large amount of inventory. So if you look at months of inventory in Greater Vancouver, you're seeing at just over 8.5 months of inventory. Okay, that's the highest we've seen since the depths of the pandemic. I think you had to go back to April of 2020 when when the economy was literally shut down. So you've had months of inventory continuing to grow now at about 8.8 months of inventory for sale. Funny enough, you actually had the lowest sales to active listings ratio in the month of September. So typically speaking, this is really important for all the people that are out there, the home sellers that had been, I've heard it all year since January turned the corner is, about the Bank of Canada, the rate cuts, the housing market's going to pick up. It's going to get better because the Bank of Canada is going to basically save us. They're going to bail us out. And one rate cut, two rate cuts, it's going to spur all this housing demand. And it's exactly what we have not seen. We have not seen that. And I think for a whole host of reasons, but basically, people are nervous. People are nervous. Inventory is continuing to grow, and what we're seeing is basically price declines effectively every single month. And so, the buyers have not returned. The investors, which were a large portion of the market, have not come because the math simply doesn't work today. And so, what we've seen is typically speaking, in September, October, you typically have like a fall uptick. You'll typically have an uptick in demand, and you'll have an uptick in listings. And what we saw in the month of September was, yes, there was an uptick in sales on a month over month basis, but you actually saw new listings continue to rise and surpass the pace of sales. So new listings continue to grow at a faster pace than sales, which ultimately allows the inventory, the months of inventory, to continue to grow. And that's why you're at 8.8, which ultimately is putting more downwards pressure on prices. Now, again, people will say, well, look at the official price metrics. They're not down that bad. The problem with the official price metrics, and again, this is really important for buyers and sellers in particular, is that what I'm seeing on the ground today is you're seeing basically all the attractive listings, all the really good products. So like, an awesome house in a great location, it's move-in ready, it checks all the boxes. In a normal market, we've been used to, we get 8, 9, 10 offers. Like that is the house that's selling today. And it usually sells in a couple weeks. It might get one offer, maybe two, or, a slight negotiation. Those are the houses that are sell. And then you have sort of everything else. And everything else basically just mixes into the blend of 8.5 months of inventory, which is to say you're seeing basically no bid in many cases, no bid for, the single family house that needs a full renovation. It needs, like a Vancouver special here where I am in the city. I mean, those renovations now, full guts, are $500,000. There's very few end users today that when they have a whole bunch of inventory to pick from, they want to go and roll up their sleeves for the next 7 months doing a $500,000 reno. And so we're seeing is all that sitting. The builders that would typically buy these for duplexes or multiplexes or even new build single family houses are also not really hitting the bid. And so you basically have no demand for these houses that need a lot of work. You're also seeing that again in the condo market where, hey, listen, the condo needs a new kitchen and bathroom and it's not move-in ready. That's where basically that product is sitting. And if you're just a generic one bedroom in a high-rise tower, I mean, you're basically only competing on price. And so all of that product is basically just sitting and going no bid. And if it's sitting and going no bid, this is the important part. If it sits and goes no bid, it doesn't sell. And if it doesn't sell, it doesn't end up in the sales data. So it doesn't impact necessarily your average sale price or your median sale price, because all the stuff that's actually selling in an illiquid market is predominantly all of the good stuff. Or if it's bad stuff, it just gets sold incredibly low. Because again, if you have 8.5 months of inventory and you have nothing good or nothing unique really about your property, you basically have to compete on price. And so I think that's really what we're seeing in the marketplace today. And so people say, well, okay, well, what's the outlook? It's got to get better at some point. And I suspect, yes, it probably will get better at some point. It always does. That, there's a natural cycle to it. Predicting the exact timing of that, however, is near impossible. What I will tell you is, in order to clear 8.5 months of inventory, it's going to take some time, and it's not going to happen in the depths of the winter market. You don't see inventory clear from 8.5 down to 4 to get you back into sort of balanced market conditions in the depths of winter. So there's not going to be a whole lot that is going to change between now and next year. Okay. So if you're a seller, you want to be, what you're wanting to do is get out in front of it. Um, and if you're a buyer, it's the time to be aggressive in negotiations. You can go in and negotiate future price declines. You can go in today and negotiate the outlook moving forward, because everybody's mindset or mentality or sentiment in the marketplace today is, well, it's going to get worse. And if the sellers believe it's going to get worse, you can typically leverage that in a negotiation. And that's really the key point, is that you can go out and leverage that in a negotiation. That's where I always kind of frame it back to say, we don't know necessarily exactly when this bear market will end. But what we do know is that we're 3 years into it. Okay. The market peaked in February of 2022, and has basically been over 3 years now of a correction. And I always like to zoom out and say, well, again, if you were compare to this to past corrections, let's go back to the GFC in the United States. Again, I'm not comparing Canada situation to what that was back in 08, 09, but housing in the US peaked in 2006. It bottomed in 2012. If you bought in 09 or 2010, you didn't buy at the bottom. But I think ultimately you did pretty good. You're pretty happy. People that bought in 2010 back in the United States, I think ultimately did pretty good. And so again, I don't know when this bear market ends, but what I can tell you is that we are 3.5 years effectively into it. And it will continue through the back half of this year. Things could potentially change, but if they're not going to change in, December of 2025, they're not going to change in January of 2026. We could look for perhaps a changing of sentiment and changing of conditions, potentially maybe in the spring of 2026. And again, I'm not saying that it for sure happens, but if you're going to see a shift in sentiment or market conditions, it will not happen in the depths of the winter market, which we're leading up to. So again, for home sellers, what this means is ultimately you have to get out in front of it. You can either let somebody else in your strata building sell and set the benchmark lower, or you can get out in front of it and set it for yourself. And that's kind of what we're seeing today in the marketplace. You have like 2 or 3 competing listings that are all very, very similar. One guy drops his price. The other seller sees that, so he drops, and they just kind of keep dropping, trying to outcompete each other. And ultimately, someone is going to set the new comp in the building, which will reprice all of the other units. And so, in my opinion, you're better off to set the comp and not let somebody else set it for you. And on the buy side, again, I believe that today's market conditions, very rarely do you get 8+ months of inventory. Very rarely do you get sentiment allowing you to leverage awful conditions in the marketplace, and the overall view and sentiment of that it is going to get worse, I think is baked into the negotiation, and in many cases is baked into the price. And that is my current view. So as always, we'll continue to watch, monitor this. The bear market continues. Favorable conditions for buyers continue. And regardless of whether you get a rate cut in October, end of October, will not change, as we've seen fixed rates have been relatively stable throughout all of this year and still sit today at about 3.99 in many cases. So as always, hope to help. See you next week.